Good morning and welcome to day 2 of Meet the Disruptors, 2 days of free online events exploring key market challenges brought to you by Ditto, the B2B tech marketing practice. Thank you for joining our panel discussion, Legerity, Meet the Team. Today, we'll look at the industry drivers that led to the founding of Legerity, the cutting edge tech solutions they provide for financial transformation, and the problems they are solving for their clients. But first, some introductions. I'm Mike Wilson, I'm CEO and founder of Ditto, and I have the pleasure of moderating today's session. And I'm joined this morning by Jeremy Wood, the CEO and founder of Legerity, and his colleagues Mark Miller, Head of Client Advisory, and Stuart Eden, COO. Just a little on me with some introductions. I spent a 30-year career working in sharp end of finance and tech in Asia, the US and Europe, but with Arbat, Winter Partners, UBS, Bank Richardson, and Deutsche Bank. Founded Ditto in 2008, and we're an award-winning market communication and business practice dedicated to fintech and emerging technologies. And it's my pleasure now to hand over to my panelists to introduce themselves, and I'd like to start with Jeremy. Jeremy, if you can introduce yourself to our audience, please.
So many thanks, Mike, and thank you for the invite to participate in the event. So my name's Jeremy Wood. I'm CEO and founder here at Legerity. I started my career in IT back in 1985, so now well into my 4th decade, so seen a lot over that period of time. I've had 5 startups, all which have generally focused on developing new and innovative applications to support finance and accounting. Legerity is my 5th and proud to say my final startup. What we do at Legerity is provide a cutting edge 3rd generation cloud-based accounting rules platform that helps firms deliver accounting change and finance transformation.
Lovely, thank you very much. Congratulations. And Mark, an introduction of yourself, please.
Yeah, thanks, Mike. Yeah, hi, everyone. I'm Mark. I'm Head of Client Advisory at Legerity. So I'm an accountant, chartered accountant, trained many years ago in PwC and financial services. And then since then, I've been lucky enough to work all over the world in line roles for different companies and involved in a lot of transformational projects. So I spent a lot of my time trying to deliver business insight to senior management and working on projects to try and enable that. So I know how difficult it is. And I was lucky enough 3 years ago to join Legerity, and it's been great working with a platform that is so focused on that difficult task.
Oh, fabulous. Thank you very much, Mark. And Stuart, an introduction from yourself, please.
Yes, thanks, Mike. Hi, good morning, everyone. Thank you for joining the webinar. I'm a chartered accountant like Mark from New Zealand. I've been living in the UK for around 30 years now, working mainly in large investment banks. I've done a number of different roles in those organizations, from chief operating officer, finance line roles, risk roles, and probably more latterly, a number of change roles. I joined Legerity last year to help drive the company forward, particularly with a focus on financial services.
Wonderful. Well, thank you very much for it, guys. It's a real pleasure to moderate today. I was thrilled with Jeremy as a serial entrepreneur, Mark, all these different line jobs globally, and then Stuart with a flavor from investment banking. It's a real pleasure bringing everyone together today. So thank you very much for your time. So just a couple of notes to the audience. This webinar is being recorded, and you can enter any questions you have into the wee little chat GoToWebinar side panel there. And my colleague, Mike Richardson. Hello, Mike, are you there?
I am, yes, hi.
Mike is on the sliders and faders, and he will take good care of us. Any questions you pop in, he will then do a quick wrap up at the end of the session. So we'll be stopping the session here around 10:40, 10:50, and at which point we're going to encourage everyone to come over to our digital hangout. So if you fire up a separate browser, ditto.tv/mtd, that's a really neat little platform where you can meet Jeremy and Mark and Stuart, and we can hang out with the guys there and have a chat with them about all of the great insights we're going to share with each other today. So let me just explain the format. So to start this morning, Jeremy is going to share the industry drivers that led to the beginnings of Legerity. And with 4 decades and a 4th decade now of technology entrepreneur and his 5th startup, I'm really looking forward to chatting that through with him. We'll then take a look under the hood, as it were, with the technology with Mark. We'll be discussing, banking becoming a platform with Stuart, and there's a huge trend from bricks and mortars to digital and how that's been accelerated with digital transformation. As I say, there'll be questions throughout the panel with the folk about some of the projects they've worked on and business benefits. Then we'll sum up some audience Q&A, a closing comment each, and then we'll move into the digital hangout. So Right. I think to begin with, then I'm going to first turn to CEO and founder Jeremy Wood. And so, Jeremy, what industry drivers led to the founding of Legerity, please? And just chat us through here. You know, this is, as you say, your fourth or fifth startup. So give us the founding story. It would be great to share with our audience.
Sure, very happy to do that, Mike. So as I mentioned, sort of Legerity is the third generation of our accounting rules technology. So out of the 5 startups, 3 have been in this space. So it's a space we know very well. And you know, the reasons for doing it sort of, you know, go back for many years. And sort of I'll just cover a little bit of the background and then why we did it again in Legerity. So our journey in this space started 28 years ago, and we developed a blueprint for what we called event-driven accounting. So this really was a systems architecture and for finance, and it was a sort of a next generation, albeit 28 years ago, type architecture. The concept was based around the separation of accounting logic from all the disparate source systems, the trading systems, the settlement systems, but to put that accounting logic into a standardized accounting rules platform and subledger. And by adopting this, firms could move to a very consistent form at a very highly detailed, granular level of accounting across all products and geographies. So rather than using the accounting functions that were sort of baked in and hard coded in their source systems, we standardized this. In those days, our primary sector was investment banking, capital markets, and that was a sector highly regulated, high transaction volumes, complex accounting needs. You know, accounting for derivatives was quite complex. And the banks required this standardized P&L across all lines of business, ideally by 9 o'clock the next morning, both at a counterparty and a trade level and also on a multi-gap basis. So it was quite a complex requirement, and the architecture worked well. So we developed technology around the blueprint, and it took us a few years to achieve it, but we ended up with many large global institutions like UBS, Deutsche, HSBC using the solution.
And these are the days of kind of batch processing, Jeremy, and kind of overnight batch runs and kind of getting data ready for next morning. So this is really struggling with technology too. This isn't the days of everything being on demand.
Yeah. And they used to have, you know, red alerts that if you didn't get your P&L by 9 o'clock, then
screens. Very good.
And you're always catching up. But if you roll the clock forward sort of 10 years or so, it became clear that there was a host of new complex accounting standards that were being now introduced across a wider number of industry sectors. And it was clear that if we took the concepts of what we had done previously, but put it on a modern platform, then we could use the same type of approach and blueprint for helping these other firms. And some of the standards that were coming through in accounting that were quite complex, things like Ifrs 9 for financial instruments, Ifrs 15, revenue recognition, and more recently, Ifrs 17 for insurance contracts. So we saw that there was a gap in the market. No other firm had really taken, you know, this accounting rules technology idea forward and improved on what we had done before. So that was the opportunity for Legerity. So we developed this, you know, we use modern technology, cloud-based, open source, all those good things, and came up with this platform that could not only help firms deliver accounting change in a fast and, you know, very efficient, cost-effective manner, but also be a cornerstone of a wider finance and digital transformation platform. So
you know, it's fantastic. And as you say, you touched on some great stuff there, which I know we'll explore later about market, open source, digital native. Yeah, and you're tackling extremely difficult problems. I know you prepared some thoughts on the next slide, please, to share with our audience some of the complexity that's driving this. You know, when we think about kind of regulation as an abstract kind of idea, this is really important stuff and very difficult thing to solve out. So maybe for our audience, if we just explain what Ifrs 17 is about, and why it came about, and why it's so important, both for us as consumers and for insurers.
Yeah, sure. So Ifrs 17 is it's a pretty complex accounting standard. It's one of these standards that doesn't just affect finance, it also affects other stakeholders within the business, obviously senior management, but also actuarial and IT. So it sort of bridges a number of different disciplines, which always makes projects even more challenging when you have to cover, you have multiple stakeholders. It's a global standard that affects about 450 regulated firms globally, and it has to be delivered by 2023. That may seem quite a long way away, so January 2023, but it's probably the biggest back office change that certainly I've seen since I've been involved in IT, and so timelines are quite tight, even though 2023 seems a long way away. Yeah.
And Tony, you know, as an insurtech, which eye-catching fintech startup, working into the space with this new technology, how has the new technology been? You know, it addresses core problems that bigger firms are having here, because maybe we just explain about the ledger piece to it and how that can be adjuncted to their other books and records, and where kind of Legerity fits in this puzzle, please, Jeremy.
Yeah, so I guess when we sort of look at how we've addressed IFRS 17, you know, we had a really good starting point in terms we'd already been working with other standards like IFRS 15, and we could use the sort of breadth of our product in terms of the calculation engine to do some of the actuarial type calculations like discounting and those type of things. The accounting rules module is obviously a core thing for applying the new debit credit standards to create the journals, and then the ledger itself, or the sub-ledger, provides us with this fantastic, you know, financial control around a very granular set of data. And unlike your sort of books and records in the firm, which are the sort of the general ledger, which is fairly or highly summarized and tends to be very historic, within the sub-ledger you can keep what we call very detailed segmentation. So you are talking about, you know, up to policy level details, line of business, all this additional business insight that Mark was talking about, you know, that leads to not just delivering compliance, which is obviously, you know, the first thing you have to focus on, but also giving you this opportunity to look at more transformational type benefits.
Yeah, and I'd like to explore that for a minute with our audience, Jeremy, because it's a really eye-catching thing about how you solve that IFRS 17. And before we move on to the next, the first of my panel questions, but just, you know, this competitive advantage of you're solving out this piece here, but because of the Legerity's forward-looking with your architecture and cloud-native and rules-based, it gives them a competitive. Because you maybe just talking about turning a reg into a competitive advantage, and what you mean by that.
Yeah, so from a competitive perspective, it's you have a number of different things. You know, one of the opportunities, if you've got this modern platform like Legerity, highly scalable, very powerful, ultra high performance, and sort of on-demand processing, it gives you the opportunity to turn a compliance project, which can be seen as tick in the box, to this really detailed set of accounting, financially validated, really useful information. So one of the sort of key sort of building blocks to that is the ability to actually account at contract level or policy level for IFRS 17. And what we have seen in other sectors like IFRS 15, where we did a very similar type thing in the telco sector, was that if you can not just see this as a tick in the box, but actually see it as an opportunity to get financial control and effectively, you know, profitability, all that type of stuff around individual customer contracts, then that really puts you in this, you know, fairly unique position that you've got, you know, this one version of the truth, fully financially validated, to drive better insight into contract profitability, you know, and all that type of projections going forward. We'll talk in our third session today, we talk about our case study with Bitter, which did this exactly for IFRS 15, and it really started to drive, you know, transformational benefits, which other firms who do at a higher level of accounting aren't able to do.
No, lovely. And I would encourage, I know our audience is a mixture of IT and business, but there's a fantastic set of use cases about the changing role of the finance function with insurance. I would encourage everyone to look at on the Legerity's website, and some great websites and discussion panels they actually done with PwC and KPMG and Deloitte. So I point everyone in that direction there. It turns me nicely, Jeremy, to the first panel question. Next slide, please. Which is, you've talked about BITA, you've talked about the great work you've been doing here, but is there a particular client project success you'd like to highlight, or project successes, and why?
Yeah, I guess everyone has their sort of own favourite projects, depending on your sort of level of involvement. So your sort of pet projects. I think the BITA one.
Which is your favourite child?
Yeah, I think and over the years I've had many of those.
Yes.
So with BITA, I think that really was so BITA Group. You can get all the details on our website. But this they really pushed. They play in this digital world anyway. They're a major provider of mobile connectivity, all around data, all that sort of stuff. But they really, out of all of the firms that implemented IFRS 15, I think they had the most advantageous one, really going down to this contract level, and it really has given them a lot more business insight. I think the other thing that was a really good sort of testament on that program was, we delivered in very rapid timescales on budget, and that really was a testament to our sort of pre-configuration. So when we go to market for a particular use case, we don't turn up with an empty box. It's all about pre-configuration and giving the clients a good starting point. So that's IFRS 15. The other one, I think that was pretty fundamental for the firm, was really our first IFRS 17 project. That was with a global insurer. And again, we never tend to start small at Legerity. This was multiple geographies in different places. And the exciting thing there was that this really was a forward-looking, or is a forward-looking firm. They have great plans around their digital data ecosystem. It's all cloud on AWS. And that started 2019. And we've got to the stage where we're at advanced stages of the project around testing and moving into transition. So again, fantastic project, fantastic delivery, and very supportive client. So that's probably for the firm the other highlight.
Super, thank you. So all that will be in the show notes, folks, and we'll follow up later. But yeah, so look, contract level data with BITA, pre-configured, quick deployment, IFRS 17, a global insurer. I know Legerity, you're very proud of the work you've been doing in Asia and in the US too, so all hats to them. So Jeremy, before I leave you and move on to the panel, just looking forward now, what is Legerity's mission and plans for the future? Yeah, just share with us a little moment on that before we move on to Mark.
Okay, well, just a sort of quick run through on that. So, we just finished recently our sort of 5th year of our first phase of our business plan. And, I think, it's always a good time to sort of step back and say, did you achieve what you set out to? I think largely that we have. We've developed the product, it's live in production, successful implementations. We have very high ratings for customer satisfaction, and we compete against multi-billion-dollar firms on a regular basis and win. And a lot of that actually was recognized by Chartis recently, where we were positioned as one of the market leaders in their recent quadrant on subledger and accounting rules technology, which was nice to see. If we look over the 2020s, again, having done this for a few decades now, I'm equally as excited. The 2020s will be a decade for digital finance transformation, and we're going to be at the forefront of that. So, firms now, I think their journey around wall-to-wall ERP implementations is now legacy. I think they want agile, powerful, rules-based applications that are available on demand, can be implemented 30, 60, 90 type day applications, and can fit into their existing legacy or modern infrastructure in a seamless manner. So we got a blueprint. We started out with a blueprint 28 years ago. We got a blueprint now, which is called Finance 2030. It's transformational. It'll help firms deliver the finance department of the future.
Oh, wonderful. And congratulations, Jeremy. You're an absolute gentleman, and it's a credit to you and everyone at Legerity, and a real GB PLC success story. So all fair play to you. It's absolutely super. That leads us nicely to turn to Mark now and actually look under the hood a little bit and talk about the tech. So Mark, just give us a drive through on the tech behind Legerity. Maybe talk us through the way the FastPost platform on which it's built and acting, why it's so dynamic. Now I know you've got some great slides prepared here. We've got this slide here, then we've got some other visual slides. quick drive-by on Fast Post, why the platform was built and why is it so dynamic?
Yeah, thanks, Mark. So I think when we were building the Fast Post platform, we had to develop an architecture that could support multiple business use cases. We've already talked about Ifrs 15, Ifrs 17. So, you can build an application that can do a very specific job, but really what you want to think of is the wider picture and how you can architect that to support multiple business use cases. So what we were thinking about is, in traditional batch type processes, you get high volumes through at the end of the period, be it a day, week, month, and you basically have a short window to process them, so very limiting. In a more modern sort of real-time or near real-time architecture, you need to process things immediately. So you need a very low latency in the end-to-end processing. An example, as Jeremy mentioned, could be in a banking sector where you need daily or intraday P&L. Now we're working in the insurance space, where you require real-time month-end adjustments based on high volumes of data. So new regulations, changes to IFRS, and the evolution of digital in the industry are now requiring much more granularity of data and more complex calculations, and not to mention, those demands of dynamic digital type products. So technically, this is a real challenge, and not many vendors have been able to solve it. So we've built a highly scalable architecture that uses in-memory data grid technology. So this provides a platform that really lends itself to ultra-fast on-demand processing with a massive amount of scalability. So this allows the back office and finance to process much more quickly whatever is being thrown at it. So this power allows us to process highly granular data, as well as significantly reduce the processing aspect of the working day timetable. So you can do more a lot quickly, and this can reduce close periods, free up valuable resources, which can then be more focused on value and business insight, particularly when you then have a lot more data and information available to help deliver that business insight.
This contract level data indeed. And I'm going to explore, actually I'd like to turn to the next slide, please, Mark. I'd like to kind of elaborate a little bit further on this. When we talk about dynamic visual precision, cloud native integrated, could you just maybe explain to your audience, this single version of the truth, why is that important? What's it all about?
Yeah, I mean, I think back in many of my roles, contract or product-based, client-based accounting has long been the target of finance, but the finance infrastructure just can't really deliver it. Traditional finance systems have not had the capability within their inherent design or the processing power to be able to do that. So typically, your accounting is performed at a highly aggregate or summarized level, portfolio or business segments, and very much at the end of the month and looking sort of backwards. So what this means is that you then end up with a whole host of separate unattached systems, be they spreadsheets or BI databases, created further downstream or even sitting in different departments that enable people to sort of break down the numbers that a finance are reporting. And of course, that often lends to silos being built up, so commercial managers having their own data that they want to look at, that they want to manage, and that's kind of disconnected then from the finance system. So you lose a bit of control, and you also lose an enormous amount of time and energy reconciling different points of view. So typically the CFO could be saying, we're not doing very well on our revenues, whereas the commercial or product owners have been using different data, and they might have a contrasting point of view, and this puts an enormous sort of wasted strain on the organization. So having an integrated view at a granular level with all those disciplines of finance alongside is a really powerful, and that's what we mean by one version of the truth. So different stakeholders in the business can be looking at information from different points of view, but of course it's all brought together. And this is where the regulation comes in, because both Ifrs 15 and 17 in particular have meant that you just cannot deliver the accounting unless you bring in that contract level data.
Well, indeed, and just to re-emphasize, I know in our upcoming panel after this one, we're joined by Calvin, who's head of enterprise at O2, and he's going to talk on that specific piece here, that at the back end with granular accounting, that the more we can innovate at the back end accounting, the quicker we can innovate at the front end of a business like O2 and carriers to deploy new innovative products and market them out into the public. I want to build on the point Jeremy made, Mark, and just talk about, maybe just elaborate. We see this wonderful stuff here: ultra high speed, real time batch processing, massive scalability. But on the bit user case, you talked about it being pre-configured. Could you just maybe just elaborate on what the pre-configured element means here?
Yeah, so pre-configured means we're not just coming with an empty box. So Legerity Fastpost is a platform, and it has a role of processing accounting type data, and it has a whole range of functions that you would expect within a finance tool. So the subledger functionality, revaluations, balances, movements, journals, all these sorts of things come out of the box, and that's essentially what the application is. But it's then very different to set it up for particular use cases. And so, that's really what we mean by pre-configured. So when you think about something like Ifrs 17, and the standard is hundreds of pages long, enormously difficult to interpret and understand, it's a very legalistic document. To translate that into what it means for a system and what kind of data calculations and postings and structures you need, that is actually difficult. So we don't see why everybody should have to reinvent that themselves. So, that's what we mean by pre-configured. We come with that layer in our system where we've kind of set it up, if you like, for a specific and complex use case.
Super. Well, it brings me on nicely to the next slide here, and it is definitely of the moment. Everyone talks about the importance of cloud, and you are great partners with AWS. But just maybe for our audience, just explain, you guys are cloud native, why that has been such a revelation for you deploying and servicing your customers.
Yeah, so I mean, I think there's a big difference between a company that is able to put their application on the cloud and one like ourselves that have been built up from the cloud on day one. So you're working with a system that has been specifically designed to work seamlessly with the cloud and maximize all the advances and investment that's going on in cloud technology. So, I'm an accountant, so I see it, you could just install your software on the cloud, but of course, that's just in that box, if you like, whereas there's a lot more to the cloud than that. And there are many advances in security, data protection, on-demand computing, performance optimization, scalability, all these things. So, a company like AWS investing millions and billions of pounds into this infrastructure, and unless you're an application that's set up and in your DNA is designed to work on the cloud, you're not going to be able to take advantage of that. So we're not just looking now, but we're looking at future-proofing our investment and bringing value over the next 10, 20 years as ourselves and the cloud evolves together. So as we talked about, you can put a wrap around your application, put it on the cloud and say, there we are, I'm a cloud-based person. But that really limits you in performance, usability, and can conflict on how new technologies interoperate with each other, give support
and I'm delighted to say that as a follow-up to everyone who's attending Meet the Disruptors over 2 days, there's a wonderful white paper which Legerity have co-authored with Deutsche Bank, KX, and Finos, actually on cloud. So stay tuned, folks. That will be popped into your inbox on Thursday morning as a follow-up to our industry event. So coming to the last slide in your section here, Mark, I noticed some pieces I just touched on Finos there, but just elaborate just what open source, the benefits of it, the work you're doing there. I know you champion this, and I think just a little bit of elaboration for that would always be super. And
I mean, I think open source, fundamentally is great because you're able to take advantage of all of the investment that's going on all around the world in different new technologies. We can't predict what these new technologies are, but being open source and compatible and able to integrate with these kind of developments is a fantastic benefit. But a lot of people raise concerns around security and the scrutiny that goes into the coding. Is it quality? But if we think about the open source movement and the way it's adopted inside applications, means this is a great asset for people who can use open source software, and we're not constrained by kind of legacy issues. But we've seen that security is not such a problem now, and in fact it's even better because the open source applications are being developed at such a pace. They're keeping in pace with all the cloud technologies and the kind of threats that might happen on applications. So in a way, open source is more secure than non-open source, and the cost of ownership is much less. And we can see or our application is able to take advantage of high class applications like Postgres, Hazelcast in-memory data grid, and Apache Airflow. And these are technologies that have been used by some of the biggest, fastest growing firms in the world, like Apple, PayPal, and Airbnb.
And I think too, look, the times we're living in, the unprecedented times we're living through at the moment, the acceleration of digital transformation, it's cloud native, open source are going to lead that way. Really fabulous insights. Thank you very much. So look, as folks, everything will be in the show notes. Some great use cases. And as I say, that white paper will be popped out to you on Thursday. It brings me to nicely to my second panel question. Next slide, please. So I'm going to start the question with you, Mark, and then I'm going to bring Stuart in. But a particular client project or aspect of technology or challenge that was difficult, or any learnings to share. We all know working with technology isn't easy. I mean, Jeremy was just talking about back in the day with batch processing. So it's are there particular learnings you'd like to share with our audience, Mark, and why?
Yeah, thanks, Mark. And I think it's something we've touched on a bit already, is that you can have this great technology, everything can be super fast, great data models, great reporting capabilities, but at the end of the day, there are still business challenges that have to be defined, and no one's found an answer for that. So the biggest challenge that I see is we go into our clients, right, what do you want? Well, that's a very difficult question for people to answer, especially when you've got, as Jeremy said, accountants, actuaries, IT people, different stakeholders at different levels of knowledge. So one of the key learnings for successful projects that we've had is have a stick in the ground, have a pre-configuration, have frameworks, have models that show the client how everything fits together. So that doesn't mean the client can't have whatever they want and do what they want, but it does mean you get the project off to a flying start and you have a very firm foundation with which to make progress.
And it's all about getting out of traps and the right foundation and base. That's super. I think I'd like to turn to Stuart now with the same question. Stuart, do you have anything you'd like to share with us and add to this?
Yeah, sure, Mark. Just sort of adding on and enhancing from Mark. I think it's great to have all the materials prepared up front. But the key thing that we've seen with a lot of our clients that really makes projects go well is getting something tangible in front of them. So the product and the system itself. Spending too long on design and too long in workshops tends to erode confidence a little bit. So the sooner we can get the system stood up, get some data in it, and start seeing outputs that the client can see and feel, it becomes tangible, it becomes real, and clients that often tends to be the sort of point at which the project goes from stuttering along perhaps to really going full speed.
Super. Well, it actually leads me in nicely to the next section of our discussion today, which is banking becoming a platform. So next slide, please. Now I'm going to stay with you, CEO Stuart. You live in an extensive 25-year, you're a veteran in the financial sector. And this is a really interesting development too, exciting development for Legerity, where traction was happening with Ifrs 17, Ifrs 15 in the insurance sector, now looking at financial transformation broadly and with banking. So I'd just like to share some thoughts about banks becoming a platform and fundamentally change the way they're doing business, and just share your thoughts with the audience, please, Stuart.
Yeah, sure. Thanks, Mike. So I think we're seeing now with the challenger banks coming through. They're really the fintechs are as much IT organisations as they are banks, and I think that's very different from the way traditionally we've seen banks operate. And although some of the large banks that I've worked at, their IT departments thought they were IT or technology companies, but not normally in a good way. Traditionally, banks have grown.
Yeah, and I know there's a great slide on it. Oh,
sorry, Mike.
I beg your pardon, Stuart. And there was just a slight lag in the line there. I beg your pardon. If you go to the next slide, please, Mike. I think that supports some of the elements you're talking about here. Just the evolution of banking and clicks to create an account, and just to maybe elaborate on this slide here, please, Stuart.
Yeah, sure. I mean, traditionally banks have grown through acquisition. And as a result, the technology is very fragmented, and it's time-consuming, difficult to change, expensive to run, and it makes it very difficult for the traditional banks to shoehorn banking as a platform into their infrastructure. And that's why we see so many traditional banks setting up or partnering with the startups and the challenger banks. So the new breed of these banking platforms that you've got on your slide there, so the Monzos, Starlings, Revoluts, etc. They have started with that sort of fabled clean sheet of paper, and by combining modern technologies, they've developed sort of fast and flexible platforms that empower the customer, sort of open the product distribution channels, and minimize critically the level of intervention required on the sort of the bank side. And so as a result, you've got very highly scalable platforms that facilitate multiple products. They're attractive, they're easy to use, and they're very cheap to operate.
Now, I know banks and regulated firms have tremendous challenges where there's a huge advantage with FastPost around regulation and automation. So maybe just elaborate on some of the benefit cases within banks and financial institutions of adopting FastPost.
Yeah, I mean, I think there's benefits on both sides, both within the banks and financial institutions, but also for the consumer. So if we look at the banks first, through the digital platforms, through the ease of client access, gathering information, the processing of transactions becomes very automated, very straight through, and very efficient. And these banks are offering products at cheaper and cheaper prices. And to be able to do that, they have to be extremely efficient internally. They can't afford rework. They can't afford manual processes. These are the things that make some of the traditional bank operations very, very expensive to run. But if you think about it from a consumer perspective, you almost got the flip side of that. So historically in banking, consumers tended to be very sticky. It was very difficult to move a bank account. If you tried to move from one high street bank to another, it was something you really thought long and hard about before you even began that process, and you could bet it would be a challenging process. We're seeing today that with these digital banks that there isn't really no consumer loyalty. So the banks have to offer great platforms, and they have to offer great service and great products. And by doing that, they'll retain their clients to the best ability they can, and they'll make their organizations profitable through that. And so for the consumers, that means they're getting the best of everything. They're getting continually reduced pricing from the banks, better products, and better offers. And I think an example of that is if you think about how you used to do foreign currency transactions and how expensive that was to use your credit card overseas or get cash from an ATM overseas. Now with the Monzos and the Revoluts, you really don't even need cash, and you get really, really competitive FX rates when you do foreign currency transactions.
So I remember, it's when I first entered the city in the late 80s, First Direct were the disruptor. They were telephone banking, revolutionized customer access. And now look at here, there are 120 clicks to create an account compared to Revolut's 24. I mean, the gap is yawning, isn't it? It's huge. It's a really interesting point on banking automation and just a strive to ever more data. And I guess that's the advantage of FastPost, cloud native, huge volumes of data at a very granular level that will please not just the regulators, but also the efficiency of processing. It's absolutely fabulous. Well, I think that leads me very nicely, Stuart, on to the next slide, please. And the third of our questions here to the panel, which is there's a particular client project or technology asset you're working on now that's exciting, and what's coming down the line. And I think you're going to start with you, Stuart, and then I'm going to turn to you, Mark and Jeremy too. So Stuart, what's coming down the line that's really caught your eye you'd like to share with the audience?
Yeah, I think that the thing that's coming down the line for us, which is really exciting, is US GAAP/LDTI. We're working with a couple of clients at the moment that where we're doing IFRS 17 implementations. They are very interested in, for their US operations, a conversion to US GAAP as well. So that's something for later this year that we've started thinking about. We're going to do more tangible sort of steps forward on that later in the year. I think that just the other one that, and it's an interesting one because it sort of actually goes backwards somewhat rather than forwards. We're looking at something at the moment for a Brexit operation where they move their business offshore to Europe as a result of Brexit. And we're doing, and this is more of a traditional, not an IFRS 17 project, but it's more a traditional insurance processing project. And so it was driven by Brexit, but we're helping them sort of put that their transfer of their legacy business over to their Brexit entity at the moment. So that's also a very project for us.
That's quite right. I mean, Brexit hasn't gone away, and these are huge. Not only do we have the challenges of Corona, not only do we have the challenge of the market shocks of we've had circuit breakers in markets, we've got negative interest rates, and we've got Brexit too, and firms need to prepare themselves for that too. A fantastic case study, super. I'd like to turn the same question to Mark. Mark, what's coming down the line? What's eye-catching? What's exciting you'd like to share with the audience?
Thanks, Mark. So we've been working quite a lot on what I would say regulatory-driven changes, which, as we've discussed, can have great benefits. But I'm really excited that we're going to target the banking industry much more. Coming up, there's a huge range of products and services that banks offer. So going beyond regulatory compliance and really looking at how we can help banks join this digital journey. So obviously a lot of investment going on in the front office, but to support that investment is needed in the back office, and we're ideally placed to really help banks with that. And so I'm really excited to get involved in that.
Fantastic. And then Jeremy, and I just want to remind folks to pop their questions into the GoToWebinar panel. We've got some great questions coming in. Jeremy, just to round off, lots of great stuff happening in your firm, an amazing 5-year journey. What's exciting? What's coming down the line you'd like to share with us?
Yeah, so as Stuart and Mark said, from a project perspective, there's lots of things, whether it's regulatory or finance transformation across sector. I think we still got another good, year and a half to 2 years on IFRS 17. There's a lot of firms that are still, early stage on their journeys. So that will definitely keep us busy. I think the other aspect to the firm is from a technology perspective. So when we set out 5 years ago, it was to do things differently. Drive innovation. That's why you do startups, is to do things differently and offer, modern solutions that allow firms to take different approaches. So we have a constant stream of R&D within technology that we continue to look at, new open source technologies, help us with scalability, on-demand processing, which is quite exciting as well. So you basically ratchet up. You don't even have to ratchet up yourself. It's driven by the demand of the data coming through, that the systems know exactly how much they should scale. I think when you look at sort of business as usual type technologies around workflow, monitoring, machine learning, RPA, those all can factor into our solutions. And then from a reporting perspective, AI and advanced reporting and data analytics, data science around big data. So we have streams in all of those things. And our job is to continue to make the platform, cutting edge as we progress over the next 10 years. So, pretty busy all round, really.
Yeah. Fantastic. No, really, what a great chat. So we're going to hand over to Mike Richardson now, who's going to share some of the questions that have been coming in from the audience. So Mike, fire away. And if you actually pose a question, maybe direct it to which panel member you think appropriate for the question.
Yeah, so the first question we've had, it asked to expand on subledger technology. So I think we've mentioned subledger technology a few times in Jeremy and Mark's section. So maybe I'll sort of start with Jeremy on this question. So if you could just expand on sort of what that is. I know we've sort of covered it a bit already, but also the benefits and yeah.
Okay. So I'll sort of cover it at a high level, and maybe Mark can talk from a sort of what it brings from a user's perspective. Subledger class of technology is, you can look at it it covers a number of things. So typically a subledger class technology will include an accounting rules engine. So you've got to get the data into the subledger in some form of debit credit. So that's an important component. And more increasingly, data needs additional calculations to be applied before you can even get ready for the accounting aspect. So that's where the calculation engine comes in as well. And then sitting in front of that, you've actually got the data API. So it's a if you talk about subledger technology in its as a class of technology, it's a range of things. And then on the outbound, you've got feeds into the general ledger and also into the reporting layer as well. So it basically sits between your operational systems, you know, maybe your trading, your settlement systems, your policy administration systems, and your final books and records. So someone said to me the other day, oh, well, it's a sort of financial middleware, and you can look at it like that. That wasn't a bad description, that it helps you join you know, your front and middle office systems to the final books and records without having to do the traditional point to point interfaces that, you know, previous generations of architectures had, which weren't very transparent or not auditable and incredibly difficult to change when you had new things. So it's that sort of class technology, but it's at this granular level, as we talked about, that really can drive additional business insight and make things a lot more efficient.
Yeah, but I would add,
I think we probably got.
Yeah, if you think about your general ledger, you're constrained. Often, you know, you can't change the chart of accounts in the general ledger very often. The general ledger is linked to ERP. It's doing a lot of things, and so the level of information you can hold there is also quite difficult. So, you know, the way to think about it, if you want some detail for an account or a set of accounts in the general ledger, what's the best way of managing it? It becomes hugely cumbersome to do that in the general ledger. A subledger is what it says. It's another ledger. So it has all the sorts of functionality of a general ledger, but it sits outside. And that means it can be hugely more detailed. It can be more dynamic because it's not necessarily linked. You know, and if you've got a general ledger that's been in place for a long time, older technology, the subledger can run on new technology, be much faster, and obviously integrate with calculations, as Jeremy said. So, you know, rather than build up a new server with a data warehouse or some sort of BI environment for a new, you know, where you want more detail, put that in your subledger with all the disciplines of accounting and finance. That's really the key for me.
Super. I think next slide, please. I can't believe how quickly the time has gone. It's been absolutely fabulous. So I've really enjoyed the session. So thank you all very much. So to round off, what I'd like to do before we head over to the digital hangout, I would like to get one closing comment from Jeremy, Mark, and Stuart. If there's one thing you'd like the audience to take away from today's discussion, what would that be? And I'd like to start with Stuart.
I think just, and it kind of goes back to, I think, some of the things that Mark just mentioned about subledgers, that using a subledger and enforcing the rigor of accounting. So, you know, that whole beautiful concept of double entry is, you know, it's a great way to be able to move forward and to, you know, to a large extent, disintermediate some of the existing legacy infrastructure that you have.
Fantastic. And same question to Mark.
Yeah, I would echo that. I remember going to Ifrs 17 conference right at the start, and we were talking about policy level accounting, and some of the traditional accountants said to me, like, you'll never do that. You know, what I would say is, you know, look at what's happening in the front office. You know, the vision for having one version of the truth within organizations is there, and the technology's ready to do that.
Lovely. And I think appropriately, Jeremy, some final closing comments from yourself.
Okay, well, thanks, Mike, and thanks, guys. So yeah, you know, having in my 4th decade, will that reach the 5th decade in technology? We'll see. But you know, but I actually, you know, keep me motivated. I think the 2020s is going to be really transformational for finance and accounting. I think there is great opportunity to really do what we set out many years ago, turn finance into a true added value business partner at the front end of decisions, rather than just you know, at the back end doing the accounting there. So let's embrace innovation, new ideas. Let's disrupt some of the traditional way of doing things, and we can really make a difference.
I absolutely love it. Fantastic. I've just so enjoyed this morning. It's been super. So again, many thanks to our panel for sharing with us their insights. To find out more about Legerity and its service provider, for a copy of today's slides, or if there's any of the topics covered today, please do get in touch at info@legeritysfinancial.com or visit legerityfinancial.com. We go to the next slide, please. We'll have some more details here. Great, and please do reach out to Jeremy, Mark, and Stuart. Their inbox is always open. Their LinkedIn digits are there. And if you go to the next slide, please, this session has been recorded, and a link to that video will be shared via email. And do keep an eye out for the white paper we're going to send out that Legerity wrote with Deutsche Bank and KX and Finos. And if you pop to the next slide, please. We're now going to head over to ditto.tv/mtd, where we're going to hang out with the guys and you can meet them up close and personal and have a chat then. And then finally, one more slide. You'll see on screen the other events that we've got. Legerity are up next at 11 o'clock with a fantastic session on continuing their transforming finance with O2, and then later then with Millennium Consulting. So hopefully you can catch one of those sessions too. Until then, thank you very much, guys. I really loved it. I'm going to head over now. If you go to the next slide, yes, over to ditto.tv/mtd, and I'll see you there. And we'll continue the discussion with Jeremy, with Stuart, and with Mark. Guys, thank you very much indeed. Super session.
Thanks very much, Mike.
Thanks.
In the hangout.